Hey everybody, today I'm going to walk you through my stock market trading routine process. This is more specific and basically it's cut into sections. So the first section involves getting energized and having the energy to trade, and that requires eating healthy, having a little bit of some workout, and sleeping early so you can wake up early, recharged, and have enough energy to trade in the morning. Otherwise, it will happen where you just wake up late and you make disastrous trades if you trade. But when I do that, I tend to not trade. Next, you have to plan, but you have to plan either the day before or actually the day of. I prefer to do both. The day before, we want to make sure that we mark on the chart, like for example, the daily chart. We want to mark different types of um, what is this, earnings? Patterns. We want to mark some patterns, and then we want to mark places where there's room to move. And what I mean by mark is draw some lines. We also want to see our retrace opportunities. So when we see candles that are too extended and they could like kind of retrace, meaning they could like go in the opposite direction about the same magnitude as the previous one. Continuations is usually when you have a candle where it's pretty large, kind of like instead of a retrace, it just continues. So it's like a negative market. Volume profile is, shows you which prices you have the most volume, and where there isn't volume, the stock, when it has a bad day and there's a little section when there's not enough volume, it tends to go in that direction. Demand and supply zones is pretty much kind of like support and resistance, but a very broad area. Breakout level, anywhere you see a spot where it's kind of having some resistance and it keeps going in that direction, or support, and it will, when it breaks, you see a lot of room to move for it to like break. Pullback is obviously just on the daily chart is you see it kind of falling. Eventually there's like a bottom, and then you see that pullback. You kind of take a trade on that one for the long side, maybe like a scalp in the morning. We got engulfing candle. So if you have a engulfing candle, that means the candle has traded a lot more than the previous days, and that tends to happen when there's a big downtrend, and that just tells you maybe it's time for a reversal and it has probably reached the bottom, or at least a temporary bottom. Flags, that's just patterns where you have like a pennant or a wedge, and it's pretty straightforward. Um, it looks something like this, either a bull flag, but then if it breaks up, it goes up, or the opposite direction, where it goes down. It's a flag and then breaks down. We also have wedges, like that. If it breaks up, it goes up. Breaks down, goes down. But not always. It doesn't tend to happen all the time. We want to see head and shoulders. Just basically, you go up and come down. That's a shoulder. And then you go up higher. That's a head. Come down. Come back up. That's a head and shoulders. So this is the head, and this is the shoulders. When pretty much an entry would be at this point, and then resist, and then the stop out line would be right here, and we'll see it continue down. Double top and double bottom, basically just you're kind of trading up, come back down, then go back up. That means it fails. It failed to break out. There's not enough buying, so it just reverses. And consolidation break is just when you have a chart where it's trading and then up and down, and then eventually reach a consolidation point where it's like not breaking up or down, but if it breaks up, it breaks up higher or lower. And then realistic move lines, percent move realisticity, just a word I kind of invented. Very straightforward. We want to get familiar with how much a stock tends to move in a day, and so a stock tends to move maybe 2%. For example, the SPY moves like 2% a day, and let's say it opens at the same point as yesterday, and then 2% would be at some point, and then 2% it will be at some other point in the bottom, -2%, +2%. So you can expect the stock to move in this range. Anything below is probably, you shouldn't get in that opportunity because it's probably too overextended, and that's something you don't want to do. And then 300% potential, you want to make sure that the option you buy can grow 300% or more. Not always the case, otherwise you could scalp it and get out quickly, and make sure that the risk is low. And then that's the day before. Then the day of, you want to see pre-market gaps. You want to check the charts again, and then all that means is that the stock moved before the market opened. Ignore my little dumb drawings. You know, that the market opened, you know, so this is in the night, and then day, and then the day before, you know, it did this trading, and then in the aftermarket it did some like choppy trading, you know, it's not a lot of activity, and then the night before it kind of, you know, continued down or something, and so it gaps down. So, you know, the day before was this, and now it opened here, so now it's trading here. So we gotta measure how much, what percent is this point right here, you know, and if it will continue down, if it's gonna continue down, it can't, if this is a SPY, it can't really be any more than 2.5% at most, I think. And so that's something to pay attention to, and that will kind of change the plan you had the previous day. Another one is news. You want to make sure you're on top of that. You want to make sure that you want to check if you still have a 300% potential with the option. And then option opportunities, I guess, scalping, or I mean, what's it called? I think I meant earnings opportunities. So earnings. All right, now we're done with planning. Now we gotta focus on the entry. When you're about to enter a trade, you gotta remember, you want to make sure, at least for me, I want to make sure I have, you know, don't take this as financial advice, I want to make sure I have at least 3 contracts. I have no bias. I have EMA touching, the price touching EMA, the price touching or EMA separation with VWAP, EMA noise channel, VWAP actions, breakout fails that are overextended to get a reversal, momentum in either direction with a percent move price target in mind, early consolidation breakout, pre-market gap, retracement if overextended, pre-market gap temporary continuation, or very slow continuation, or stays the same or reverses. Consolidation support and resistance, 3-bar reversal, engulfing candle for reversal, pullback, momentum scalp with engulfing candle, short on resistance, long on support, pullback on pullback, mini rest, consolidation break, option premium base price, critical level, whole number, volume profile, peak and valley, etc. Continuation fail equals retracement, better entry at second attempt, small spread, in overall daily trend alignment. All right, now that we have these entries to be familiar with, I should probably do a video on all these, but it's probably gonna take too long if I make a video right now. But it's a mixture of advice and for myself, tips for myself to keep in mind, and little technical patterns. For example, let me give you EMA touchings. It's basically, you have price, right? And EMA tends to just, you know, kind of trace it, and then if you see a drop, and if it touches, I tend to go short at that first touch because it tends to go even down, more down. You know, this is I use the 13 EMA, but on the 1 minute chart, 1 minute chart, not the daily. Okay, and then Also, for example, what's another one that's kind of complicated? Mini rest consolidation break. Mini rest consolidation break is just, you have it kind of trending up, and then it stops, and then it just kind of trades sideways. It's kind of like a bull flag, and then you have this little resistance, and then boom, it breaks. You have your entry right here. Okay. And yeah, it's I'm gonna do maybe a video on this eventually. All right, now that we are in the trade, we want to make sure that we take into, so before you trade, you're looking for your entry. This is your entry. This is my entry indicators. And then while in the trade, I need price target evidence. I want to make sure that I have evidence that it's going to reach my price target. For example, it pulls back on a pullback. So it pulls back, and then you think it's going to reverse, but then it pulls back again. So then boom, aggressively, even better. So that means it's still going in my direction. Mini rest break is basically kind of this. EMA rejection, consolidation, EMA stabbing far away from the entry. We make sure we have time, and then we have volume. We are in this room to move zone. We understand price noise channel, and we're not confused by it or swayed by it. And that price channel is pretty much trending still, and it's abiding by price noise channel support and resistance. My thoughts are clear. I gotta make sure that's the case, and that there's SPY sympathy that's trading kind of in the same direction as SPY. That's kind of helpful. That I understand my scalp percent move, my day trade percent move if I'm doing a day trade, and realisticity is probability. Okay, you gotta make sure I do that. I want to explain let's see, price noise channel support. So basically, that if it's, because price doesn't just go straight in a line, right? It's up and down, 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 up and down. And this up and down movement is creating a little channel. You see the tops and the bottoms. So we can't get confused when it does this little break that it's going to continue higher. No, it's going to continue down, and then hopefully we have a little support here where we see this price noise channel bounce and continue higher. So you got to kind of see the overall picture. This is more for like a day trade. A scalp, not really. Scalp requires a lot of momentum and then a huge move, fast move. Otherwise you are getting out of the trade, and that's what I mean. So and then it does this again where it goes, it forms another support, and then you draw that line, maybe like this is another support. So making sure that the price channel touches that point and then moves higher. Okay, and then this is another one, another resistance that you can break out of, and then once it breaks, it becomes support. All right, that's what I mean by that. All right, now that you're checking evidence. Otherwise, if all these fail, any of these, at least one I guess fails, then you get out of the trade and you stop out. And then next one, when you want to exit the trade, you're basically an engulfing candle is kind of a sign that you should get out. 3 candle reversal should be a sign that you get out. Hits entry stop, basically, I mean, that's straightforward, meaning it just stops you out. Sell on strength, meaning you take some off the table. So this is also like take some off the table and stop out. Or just, it hits your what's it called, basically it hits your target. That's another one. Fake out, you got sharp movement. Sharp movements don't really continue. Spook is kind of like a fake out. Choppiness, meaning it just slows down, just sideways, and it gets boring. It kind of destroys your premiums. Violates support and resistance, starts a new trend in terms of price noise channel. Instead of going higher and higher, It starts forming over and over. It starts a new trend near entry. And yeah, and also hits your target. It's basically, but as it's heading towards your target, you want to take some off the table. And then finally, after the trade, you want to draw on your chart, like on your tools. You have the text box where you right click, and you type in what you want to write, your thoughts and stuff. Give it a letter grade, like was this an A plus, a F trade, kind of like a teacher. You're grading yourself. Mark some levels that you thought were important that you didn't pay attention to before, and then take a screenshot and save it, and then review it next a little bit, and then you can review it in the future. So that's pretty much my trading plan. I haven't applied it because I've been doing a lot of Uber, and so I've been doing a lot of Uber just to get my healthcare stipend and get my hours for that. So I hope you enjoyed this video, even though it was boring. I'll see you all on the next video. Bye bye.